What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Thursday, April 11th. Alright guys, Palantir stock here on Wednesday finished the day down 39 cents a share. That's minus 1.71%. It has faded a few extra cents here in the after hours. Listen, take it with a grain of salt. The after hours is it's ruthless. Man, it's easy to bully stocks. It's easy to pump them for that matter. But the volume is very low, so take it with a grain of salt unless volume is tremendous, which is very rarely the case. But listen, let's take a look at this thing here and try to pull out as much bias as the market is possibly willing to give us here today, or did give us. So let's start here with a volume profile analysis just on the 5-minute chart. Listen, Palantir dumping off at 7:30 a.m. Central Time. That's 1 hour before the market opened. We got CPI today. This is a market-wide event. This is not Palantir specific, okay? We just did Tesla. Tesla did the exact same thing. Let's see if the volume profile is going to offer us any bias here today. I want to look at this move in the pre-market. I also want to look at this swift recovery that we got from the pre-market into the open. That's really about it here today. All right, let's take a peek. So you can see here that, we got a bit of extra volume in the pre-market, but honestly, guys, we're looking at a data event, okay? We expect volume to increase. It was a big red bar, okay, but it was market-wide. So, I mean, there's going to be some bearish bias, but it was data-driven. So, to me, pulling bias out of a volume profile, when you have data in the mix, it changes things. So, if we move on from there and start looking at the open, we get a very normal open, actually. This push, we get a high volume opening bar, though it was higher volume than what is typical on Palantir. That's a pretty high volume opening bar on Palantir. Nearly 2 million shares in 5 minutes. And then we get a quick fade. Okay, so due to the sheer fact that we saw a pretty strong bar off the open, and we got a lot of volume, it's only one bar, so I'm not going to say that this is really obvious bullish bias, but I think we're comfortable saying that there's a small amount of bullish bias when we peel back a layer of the onion, look aside from the price action, just at the profile, right? It's there. It's not incredible, but it's there. Now, let's move on here. We got to take a look at the 30-minute. I want to look at the psychological and the self-fulfilling prophecy levels. These are the areas that everybody has their eye on. So what we do is we look at the 30-minute, 4-hour, and daily, and I just keep it super basic. I don't have the clouds and this and that and the 26-day EMA. I have the 50 period and the 200 period. That's all we need because that has the most eyeballs. And when you get the most eyeballs looking at something, you end up with that self-fulfilling prophecy idea, right? Now, you guys remember yesterday's Palantir video. We were just barely reclaiming that 200 period here on the 30-minute, and we were talking about that a lot. Well, we rejected here this morning, and we faded. Again, it was data-driven. It was news-driven. So, take that as you will. But moving forward, if you're looking at any chat rooms or like our free Discord or anything here tonight, you might see people talking about this crossover, saying, wow, look at that death cross on the 30-minute. It's overhyped. Look, the death cross, the golden cross, to me, it doesn't mean anything. It doesn't mean anything at all. All it does is add a very small psychological element that as soon as you start looking at the actual moving average level itself, that trumps the cross. Okay, the cross quickly fades out of relevancy, at least to me. I've never seen it really mean anything on any time frame in hindsight, right, when we look back. But the truth is, when you look back in hindsight anyway, if you go from a raging bull market to a huge bear market, you're going to see a death cross, but it's like a chicken and the egg kind of thing. Right? The death cross comes as a result. It's not an indication of it to come, right? Because the moving average is just that. It's the moving average. So you're going to see the crossover of the quicker moving average over the slower one when you get that big transition in price movement. So I want to look at things that people have their eye on in real time, right? I don't want hindsight indication. It's not helpful. So looking ahead to tomorrow, guys, we're really not out of the woods like bears, I'm saying, because it's only a 1.5% move back upside to retest that 50 period, and it's a short additional move from there to retest the 200 period. We're less than 2.5% away from a reclaim of both of those, and we know that Palantir, it can pick up in terms of volatility when it wants to. So bulls, listen, just a nice reclaim of one, if not both of those on big volume on the retest, like the breakthrough, and then a low volume retest, right? And then a high volume pushback upside on the confirmation. That's the ideal scenario here on the 30-minute, whereas bears, this 50 period is in a descending position. You guys would love to see that continue as long as you can see rejections on any retests of the 50 period, okay? Let's move on to the 4-hour. You can see here a similar position as we've been in the last few days here on the 4-hour. A descending 50 period. Bears, you guys like this. Any retest, right? You want to see rejections. Bears, this crossing over below 23, which is a psychological level, is also a good thing for you to see. Listen, bulls, getting above, 23, we're going to talk about that here in a second, but getting above the 50 period here on the 4-hour is going to be necessary here in the near term. We haven't really seen a whole lot of testing of it. We had this one big test and rejection recently, but that's really all I care about on the 4-hour bulls, is just ideally in the near term getting back above that 50 period. Okay, but listen, the real story here on Palantir is on the daily. All right, and you can see here the daily's been a story as of late, to say the least. I mean, we had 23 and the 50-day lining up, which is like what everyone's watching on Palantir right now. Every fund, institution, retail investor. It's the obvious story right now. All right. And Palantir is kind of faded below. Okay, the 50-day has continued upside, which is fine. All right. But the bears now, you bears are kind of left with one option, and that's to see 23 act as a resistance, because the 50-day is no longer really on your side, because a retest of the 50-day implies a break upside of 23, which you bears obviously wouldn't really want to see as that 50-day continues higher. So bears, any retest of 23, you want to reject lower and head down. Use that as a ceiling to head down to like 2130. All right, whereas bulls, 2130 is kind of like a last resort support level here, at least, and then, because really after that, you're looking at maybe $20 a share. And then from there, you're looking at the 200-day at about 18 and a quarter. That's a pretty big, that's kind of a drop, right? So bulls, 2130 is that backstop that I'm paying attention to, but really a reclaim of 23, ideally even more so, like the 50-day moving average. If we can get above both 23 and the 50-day and start holding above there on an ascending moving average, area of support, right? If we can get above there, that could likely help push Palantir back up toward 25.50. But listen, we have to take this one day at a time. In the very near term, my eyes on 23. A break and hold of 23, if not that 50-day moving average, is my best case scenario day to day, looking at this with a bullish perspective. All right. Now listen, expected move on Palantir. The next expiration we have here is Friday at the close. The expected move by then is plus or minus 72 cents a share. Now, there's no earnings or anything between now and then, so if we just divide that by 2 to get each day's expected move, at least based on today's data, that gives us 36 cents a share of expected plus or minus move per day, or really tomorrow. But again, I like to add about 50% to that to make up for the probability that, we could see a red and a green day, which kind of throws off that initial calculation. So I add 50%. That tells us the market's expecting something around 54 cents per share of movement per day. Today we had 39 cents. So that's actually, not a tremendous amount, but again, it's going to depend. It's going to be somewhere in between that first calculation and that adding kind of 50% calculation. Typically is going to be the one standard deviation expected move. With something like SPY, we have the luxury of daily expiration, so we don't have to do any guesswork. But with weeklies, there's a little bit of guesswork, but we can base it off of not only market conditions, but also experience. And then, that 50%, it's likely to change in the future. But right now, that's what seems to be consistently a little bit more accurate, okay? But remember, that's just the volatility expectation, so that helps us in positioning ourselves, especially utilizing options more effectively. But there's one more thing that we can add here, right? My favorite part of the daily video, to the directional bias that the market's giving us, which is the chain. Now you can see here a little under 200,000 contracts traded today, 114,000 calls, 73,000 puts. It's interesting. We actually typically see a little bit more heavily weighted call side bias on Palantir than we're seeing here today. It's still a call side bias, but as of late, we've been seeing a little bit heavier than we're seeing today to the call side. But of course, still call side bias there. In the short-term speculators, guys, actually a little bit undecided. You look down here at the 0 to 20 delta range right here. Those are those far out of the money contracts. 34,300 calls, 32,900 puts. Just essentially 50-50, barely weighted to the call side, which tells me that we're seeing a little bit more short-dated bearish activity than what is, than usual. Which is bumping up that put side overall bias and making that short-term bias a little more evenly weighted. However, you start going closer to like at the money, the 41 to 60, you start seeing that obvious call side bias again. And those at the money, like the 41 to 60 delta range, that's going to be on average more like a midterm outlook. If you start averaging all the expirations out, that's typically where it lands. Listen, guys, if you're getting value out of these daily Palantir videos, let me know down in the comment section. Hope to see you subscribe to the channel. I appreciate it, and I'll see you in the next one.